Thank you very much for joining us, everybody, this evening. Welcome to the Value the Markets shareholder webinar. We're joined this evening by Open Orphan's Executive Chairman, Cathal Friel, who's going to talk us through some of the recent exciting developments that there have been with the company. There's been a huge amount of news flow. The company has been extremely active. We last caught up with Open Orphan about 3 months ago, when we spoke with Maurice about the future plans for the company. And I think it's fair to say, so far, the company has really executed on that. So this evening, we'll have a brief presentation from Cathal. You'll see in the bottom right-hand corner of your screen, there's a chat window where you can write questions which will come through to our moderator, which will be passed through to us over the course of the evening. Once Carl's finished his presentation, he and I will discuss the company further. I'll put your questions to him, as well as questions that have been sent to me as well. We've obviously received quite a few questions in advance of this call as well, a lot on social media and direct to Value the Market. So thank you to everybody who sent those. So Cathal, let me pass over to you, and you can give us your presentation.
Ben, it's a pleasure, and really for everybody listening, what we're trying to create is something unique on the AIM market. I say I'm 55, I've been around the AIM market for a long time, corporate finance, promoter, and in this company, we said stated aim when we IPO'd it on the 20th of June, we were going to acquire a number of struggling pharma services companies, bolt them together rapidly, create some scale. We weren't going to develop products because I felt products is too high risk, high reward, and a number of loss-making pharma services companies together and rapidly create what we would call a European pharma services company. We also said we were going to focus on niches such as the orphan drug, and why that is because, look, being frank, I know the orphan drug space reasonably well. My last company, Amrit Pharma, which I IPO'd 4 years ago, and which now did 150 million revenues last year, proved reasonably success. So I thought, let's focus on orphan drugs because they're high margin, small trials, and a very growth market. We have done that, and as you'll see from slide 5, that's the first slide up, number 5 here in front of me, we're creating a European full-service pharma company. And why is that? Because, look, we want to provide everything from how you make the drug, that's CMC, preclinical, that's through to preclinical phase 1, phase 2, and regulatory approval. And then along the way, and we want to talk about in a minute, we acquired a really exciting, and we believe it's called a sleeping giant. It's hVIVO. They're the world leader. I'm speaking from the office here along with Trevor Phillips, our CEO, in East London, part of Queen Mary's Hospital. And let me talk more about it in 1 minute. But basically, we took Venn, we acquired it. We've almost fixed it. Venn had 179 staff when we acquired it at the end of June. Massively loss-making, never made money. Pharma services companies should not be loss-making. It's a cost-plus business. We've taken out 40, 50 of the Venn staff. The last 25 are unfortunately leaving their company in the coming weeks. And then we'll have a nice profitable services company within Venn Open Orphan. We're in the same process now with hVIVO. The exciting part of hVIVO is, and let's go into it on that slide, it provides, top left-hand corner of the first slide, hVIVO provides viral challenge studies for antivirals, vaccine, respiratory diseases, laboratory services, highly special virology, immunology, and respiratory. Being honest with you, all of those words weren't in the broadsheet or tabloid papers 3 months ago when we started this deal. But I think every word on that page is in everybody's lips these days. So sometimes you get lucky. We're very fortunate. hVIVO is in the enviable position to be able to help. It helps pharmaceutical companies speed up the testing of vaccines. And guess what? There's a lot of work going on at the moment to try and speed up testing of a coronavirus vaccine. So we're one could say, the right place, right time to help out. It's a very unfortunate predicament, but as they always say, every cloud is a silver lining. So the current interest in vaccines is actually almost a golden opportunity for hVIVO. Vaccine development work, the reason we picked up so cheap, has been the Cinderella of the pharma industry for a long time. The reason we acquired it, it's quite similar to orphan drug trials. Orphan drug trials are 100 to 150 patients, can last 3 to 6 months, are not expensive to do. hVIVO challenge studies they do are 100 to 150 patients, can last 3 to 6 months, and at the end of it, the company will know, does their vaccine work or not. So that's kind of in summary what hVIVO does. It has Europe's, and I'll come to it in a minute, only 24-bed commercial quarantine unit based here in part of Queen Mary's Hospital. It's a virology laboratory. And if you look at the bottom of that page, we now provide a full service when you integrate it together. Top right-hand corner, Morris, my colleague who co-founded Open Orphan with, he came from a background of data, and he put together the Open Orphan Genomic Database. We're busy populating that, and you'll see there on the top right-hand corner, it says Orphan Drug Genomic Data Platform captures valuable genetic data from patients' population, incorporates AI tools, but guess what? Bottom line, potential to utilize hVIVO's patient data. hVIVO have been doing patient challenge studies, testing vaccines going back for almost 30 years. They have a treasure trove of genomic data, which they have never gotten around to monetizing. So guess what? We now can help them integrate that to our platform, accelerate our genomic database. So that's an absolute fit. Bottom right-hand corner of that slide, Immutex. Being frank, folks, this is our lottery ticket. hVIVO burned through 113 million, most of the compliments of Mr. Whitford. A lot of the money was put in to developing this product. hVIVO is the only, as far as I know, company in the world that has a phase 2 completed universal flu vaccine. It's getting ready for phase 3. We're not going to spend any money on that, but when they get a direction of travel from the FDA and the EMA, the plan will be to out-license that. Immutex today also has a mosquito virus vaccine. We're downplaying that, other than you're investing in a very profitable, plans to be profitable pharma services company, and this little lottery ticket in the corner. Again, the current coronavirus epidemic makes the whole idea of a universal flu vaccine very, very topical. So I would advise people to keep an eye carefully on Immutex. It could really transform the business, but we're not dependent on it. Moving swiftly on to the next slide. Work? Yes. The next slide then is titled Higher Value Longer Term Contracts. We acquired Venn through the reverse takeover of it last end of June. We fixed it. We eliminated an awful lot of headcount, and guess what? It will come to me. Venn, instead of the revenue go down, Venn revenue has gone up, and with the biggest pipeline ever going into this year, despite losing a lot of middle management. We had first discussions with hVIVO early November, and by the middle of December, we had 3 joint pitches gone out. And why has the acquisition of hVIVO been the fastest takeover of one public company on AIM by another in 7.5 years? Is because look at the second slide, the high value and long-term contracts, slide number 2. Basically, challenge studies are very sticky, very specialist. hVIVO are one of the few companies in the world who specialize in a lot of challenge studies. They're the market leader. So here in East London, we have the world leader in this really simple little niche where you test flu vaccines rapidly in a live environment in quarantine clinic. Interesting, very exciting space to be in the moment. But they invariably get asked to do phase 2 studies. They don't have the capability to do it. They invariably get asked to do data management. They don't have the capability. They invariably get asked to do CMC. And they invariably get asked to do preclinical phase 1. So put the 2 companies together. And the problem with Venn Open Orphan is we don't have enough work for our preclinical team or our phase 1 team or our phase 2. There were more people we were going to let go in the coming months. hVIVO are turning down customers that work. So now, as per slide 2, we put the 2 together. The typical contract for hVIVO was 3 to 5 million, 2 to 3 years. The typical Venn one is 500,000 to 7. Put the 2 companies together. The contract value on average goes 10 to 20 million in 3 to 8 years. So now you can see why these 2 companies on that page fit together like a glove. So rather than dwell much on that, let me bring you then to how this fits together. And the really exciting, and on our recent roadshow, which we led and which was basically predominantly institutions, was 5.3 million. It was oversubscribed. And this is my favorite slide. It's a hVIVO, a very extensive asset portfolio. We acquired hVIVO for 13 million in Open Orphan paper. And along the way, guess what? It came with 2 million in cash. So the real value was near 11. However, we're saying we believe there's at least 50 to 60 million of real assets in hVIVO. And these assets are unique. And the world is screaming out for them. Just sitting here with Trevor, we've an inbound from some Chinese people wanting to avail he's never heard of before. The world is looking for access to these assets. For the last 3, 4, 5 years, they've been underutilized. That was a big part of the reason the company lost an awful lot of money. Bottom of page 3, the London unit. First of all, top of page 3, 100 million was raised and invested in hVIVO state-of-the-art labs to support its clinic, challenge study models, and former drug discovery strategy. It was actually 113 million was raised, an awful lot of money. And so we acquired it for less than 10p in a pound. It wasn't all wasted. The London unit in the bottom left-hand corner of page 3, that is Europe's only 24-bed quarantine unit. It is basically able to treat patients, test them, run vaccine trials. Replacement cost in my books is between 25 and 30 million to replace that. Slightly over to the right, on-site is quite unique. There was at least 7 or 8 million the replacement cost of the on-site virology laboratory. And virology, that's for testing vaccines and viruses, and is not very topical today. The bottom of the page, the piece the lawyers did sign off on. They were arguing, is it the lab worth 25 million or 20 million? But the thing they did sign off is hVIVO. See the bottom of that page 3. hVIVO has a leading portfolio of 2 flu, 2 RSV, 1 HRV, 1 asthma, 1 cough, and 1 COPD viral challenge models. To replicate this portfolio would cost in excess of 25 million and take a minimum of 6 years' work. No other challenge study service provider in the world has such a comprehensive portfolio. To be honest, there's one company, a 20 billion company called SGS, based in Switzerland with a Belgian office. It has a small 7-bed quarantine unit, and it has 1 challenge study model. And there's only 1 other unit in the West Coast states called West Coast Clinical Trials, and it has 1 challenge study. So when you add the clinic, 25, 30 million, the lab, 7 to 10 million, and the portfolio, you can clearly see we have 50 to 60 million in real assets. Compliments of Mr. Woodford. And weirdly, when we started discussions 2-3 months ago, the world wasn't aware what was a 24-bed quarantine unit. I think everybody listening tonight will say, I think we know what that means. Yes, a viral laboratory is not handy. So look, we're extremely unique, extremely handy. And being honest, it's not insight by us. This was right place, right time. We just got lucky. However, the business has been massively loss-making, and you will see. And working here with Trevor, we are committing to the market. The combination of Open Orphan and hVIVO will be profitable in the coming months, not quarters, months. 2, 3, 4 months, this company will be breaking even. We're trading at the moment. Anyone wanting to buy the stock today, we have about a 34, 35 million market cap. That's just marginally above 1 times revenues, and we've 7.5 million cash in the bank. So we're trading at less than 1 times revenue. Every other pharma services company trades between 2, 3, and 4 times revenues. Why? They're hugely profitable. The spin-off cash. Our entity doesn't make money today, so we're fairly valued at 1 times revenue. However, the minute we prove to the market we're profitable, we should be at 2x, if not 3x, uplift in our share price, because now we'll be judged as our peers. How are we going to get there? 4th and final slide, the robust combined pipeline. hVIVO have a pipeline, and this is a solid pipeline of 81 million contracts. In the past, that pipeline was vastly smaller. In the past, they converted, you'll see, to 46% of their contracts. We're not judging they're going to convert that. But even a fraction of that conversion will produce. The combined entities last year, Open Orphan and hVIVO, came almost close, just shy of 30 million. So we have a business today, 30 million past tense last year, and on target to break even in the next 3-4 months. Further down that slide, Open Orphan building recurring revenues. What do we do in Open Orphan? We acquired Venn, which in turn has customers in Paris and Amsterdam for about 30 years. One-off short-term contracts. I came in, we lost a big percentage of staff, got rid of them, and we started converting. They've got Ipsen has worked with the Venn business in Paris for 25 years. Karna in Japan, likewise. And we said, folks, if you want it, we need 3-year contracts. The same with our friends German at Tier 1, that's Boehringer. They did all their PK studies done with the Venn office in Amsterdam for the last 20 years, 3-year studies. So at the moment in Open Orphan, we have 10.5 million in confirmed backlog orders, 4 million in advanced stage under MSAs, and approximately 10 million. So all we're targeting in our model at the moment is doing from 30 million last year to 35 million this year. And if we do that, our model is showing we'll make 5 million EBITDA this year. So that kind of sums up where we're coming from on the pipeline. kind of sums up where our plan is. I would like to talk briefly about why we feel we're the person to do this. Basically, you'll see in the share register, the management team is probably one of the largest management stakes of any AIM companies. That's predominantly a large stake by myself, Brendan and Morris, where I put over 2.5 million of my own cash into the company to get it going. I'm remaining very hands-on involved as an executive chairman. I know some listeners around Christmas panicked and pushed their stock down to 4p because thought I got bored and moved on. I was going to be a boring old non-exec chairman and I wasn't going to be around. I'm sitting here in Trevor's office at 7:20 on a Tuesday evening in Whitechapel in East London. And as Trevor knows, as I say, I'm not going anywhere. We're going to stay very hands-on. These companies need to be fixed very quickly. So in the IPO, the placing 2 weeks ago, we announced it publicly, and guess what? Our share price went up. We went predominantly to institutional high net worths, but because we guided the market what we're doing, retail private clients were able to go in and buy the stock around 6 or 6.1p. We have had some selling in the past week, and it's kind of almost glad to see them gone. We had one large institution who didn't want to engage with us, Jupiter, and I saw on Friday their Tier 1 came out, and I gather they're gone. They're off the share register. I can't officially say that, but our broker friend said Jupiter no longer holds shares. We had another Tier 1 come out on Friday from Invesco, one of our other large shareholders. That was only confirmation that they haven't sold any shares. Their percentage had dropped from 11 to 9. That was dilution because they didn't follow the money. We've been assured by the larger shareholders that like this roll-up, they like the consolidation, and more importantly, they would like us by the turn of the year to sell the business on to a larger entity and we all get out together. And being frank, that's music to my ears. I said at the IPO last June, we were going to fix up one or two small struggling companies. It's almost like fixing up houses, paint them, clean them, new windows, fix them, put a tenant in, and move them on. So being honest with you, that's kind of what we're doing with these businesses. Taking two loss-making, struggling companies, knock them together, get good revenue in them, make sure they're profitable, and position them for an exit, hopefully later this year, where we will exit on 2 to 3 times, maybe 4 times revenue is the target. So I think in summary, Ben, I might hand over to you if you have any questions. That kind of gives everybody a whistle-stop tour. We said we'd do it. We've done the fastest takeover in AIM over Christmas, and we're quite excited where we go from here. But we now have a company that's, believe it or not, in the eye of the storm, and we're delighted to be able to provide services now to the UK government, the Chinese government, and pharma companies, that we have a full-service quarantine clinic where we can run immediate trials. We've got a full viral laboratory and the world's largest portfolio of Chinese study models. So I would say sometimes the harder you work, the luckier you get. But being honest, we all worked very hard, but we didn't believe 2 months ago that suddenly Chinese study models and viral and vaccine development would be so sexy and so interesting. Ben, does that give you a whistle-stop tour of what we have?
Perfect. Yeah, thank you very much, Cathal. So we actually didn't move on to slide 5. So it's okay. But you did talk a little bit about the pipeline. So I've pulled up slide 5 so that our viewers can see that.
Apologies.
Can we just very, very quickly, let's just have a quick
absolutely
talk about the pipeline. We've received a number of questions about it as well. So why don't you just talk us through some of the highlights on the pipeline so we can see that in front of us now?
Yeah, look, apologies. I should have moved up forward. Slide 5, robust pipeline, combined pipeline. Let's take it from the top is easier because, Ben, I probably talk too much and too fast. Across the top, hVIVO, solid pipeline. Opportunity client A, RSV challenge study. That's volunteers, 38 volunteers, contract 2.4. That does a series of what's in the pipeline. They total 81 million. And the top right hand side says there's the hVIVO. Solid pipeline of identified pitch for contracts as of January 2020 is 81.2 million. Significantly greater since the new management team implemented January 2018, 3.7 million. January 19, 39. So the pipeline last year was 39 million. The pipeline in January 18 was 37. So the pipeline has doubled of this. The current management say this is a solid prospect. Next knob, 46% of the January 2018 high probability pipeline value converted to signed contracts during 2018, and a similar conversion of 42 of last year's pipeline converted. Not all signed contract value is recognized as revenue in the year the contract was signed. Often a proportion continues in the following year. as a contract delivered. And that's happening at the moment. There's a large, let's say, German vaccine company that's in all over the news. They're in the clinic as we speak. They have all 24 beds booked out, and they're testing, we can't say what it is, some novel virus or vaccine. So what we're saying here, hVIVO did about 14.5 million revenue last year. We're not going to do 40 million. That would be an absolute blatant lie. But we're guiding the market. Revenue will increase this year. The one thing we're doing in hVIVO is slashing the cost. Trevor and Tim committed 18 months ago. They took 11 million out of the overheads. And in the weeks and months ahead, we intend to take another 2 or 3 million of that overhead. So that leaves me very excited as the single biggest shareholder. I underwrote the deal to 2.5 million. I got another 300,000 in last week. And that, wow, we have a company that's right in the eye of the storm. It's in there with Corona. Everybody wants to talk to them. It's been underutilized for years, but it's pretty comfortable. So the next one down, Open Orphan, building recurring revenues. We acquired Open Orphan for 2.5 million. That was 20% of trailing revenues. We acquired, now the really interesting one, hVIVO. hVIVO raised 113 million real cash in the last 5, 6, 7 years. It's a bit of a joke. We moved the decimal point and we acquired it for 13. That's 1-3, less than 10% of invested cash. And of that 13, there was 2 million cash in the balance sheet. So that has to be the steal of the century, given that we feel. Now, they're not on the balance sheet because Mr. Woodford wrote all assets off. He was a discovery company. But we have a clinic that we think is worth 25, 30 million. We have a viral laboratory that's worth 5, 10 million. And we have the 25 million of challenge study models. So I'm really excited about that pipeline, what we can do with it. Within Open Orphan, all we're doing, shedding headcount, shedding middle management, shedding senior management, and building relationships that are going back 25 years with Ipsen, Karna, Boehringer, good people like that. So what we're saying there, Open Orphan revenue is that over 10.5 million is confirmed backlog. That's orders in hand with an additional 4 million advanced stage with clients under MSAs. And we've 10 million in budget proposals under review. That's what we've pitched for. So the reality was Open Orphan did struggle to do 14 million last year. We now have firm orders of 10, potentially 14 in the coming weeks. So we will definitely increase revenue there. Last blob on that, combined pipeline is expected to deliver significant growth and profitability. The directors believe there's significant value uplift as the combined business demonstrates profitability with profitable CROs are all trading at a multiple of 2 to 3 times revenue. Zico, Ergomed, they're all 3.5 times revenue. So we're currently, because we're loss making, we're only trading at 1 times revenue. I believe in the coming weeks, once people realize the hVIVO orders are coming in, there has been no orders announced in a long time, and the market realizing, wow, this is the sleeping giant that is also in a Cinderella industry, i.e. the vaccine development, but suddenly Cinderella has come to the ball. Does that make sense, Ben?
It really does. Yeah, it really does. So I'm going to throw a little bit of a curveball at you here, because I've been sort of listening with a great deal of interest about the business model and your plans for growing. Because when I last spoke with Maurice, we focused very much on the technical side of the business and the genome database, which was very, very interesting. But one question that's just occurred to me listening to you, you've obviously talked a lot about the cost-cutting initiatives across the various businesses. Now, given that this is the sort of business that is obviously very reliant on its asset base, you've talked us through the carrying value of the real assets you have and how the market cap is obviously trading at quite a significant discount to those. But what I wonder is, how do you manage to maintain morale among your staff, given that obviously you're, wielding the axe, for want of a better expression?
Yeah, Ben, look, a good question. And look, I was at the Share Magazine Zenkos investor thing today, and we have an investor who backed his IPO. He's back in, and he asked that question. So I said, look, I decided I was in Paris last week, and I asked some of the staff in the previous week, and said, folks, look, you've been in a small struggling company. Your share price dropped by 90%. I'm in Mr. Big Bad Wolf, cost cutter. I'm throwing middle management, senior management out. That's my style. But the feeling is among them, they're delighted to see finality. A lot of these companies are just too much middle management taking big salaries. And the junior and middle, the people actually the fee earners, the people doing the consultancy work, have stepped up to the cup. More importantly, a lot of people initially, when I start talking in videos 6-9 months ago, saying, oh, you can't be saying you're going to flip the company on. Actually, the staff are quite excited that they say, wow, we've been in these little struggling companies for years. Wouldn't it nice to be in Brendan's old company, Icon? They're a 9 billion market cap. They'll pay a nice pension. They won't be worrying to run out of cash. So to answer your question, Ben, I couldn't answer that honestly until I quizzed a few of our staff and say, folks, what do you think? And their view is, Carl, hurry up, fix the company, sell it. We don't job hop. We would be very happy being part of an Icon, a Parexel, a Wuxi, or something like that, because the job security is then solved. Does that answer your question?
Yeah, absolutely, it does, and it also makes a lot of sense as well. I suppose that for when working in an environment which is shrinking with a shrinking company and all the uncertainty of that brings, I suppose at least as you said, this brings a degree of finality in one sense, but perhaps in a more positive light. What it also does is it gives people a view to potential upside in the future as you look to rebuild and make a much more ambitious company.
Absolutely, absolutely.
So dovetailing into that, Riyad's asked us a question, which you've touched on previously, and also in your answer just then. You've talked about your plan to sell the company within a few years to a large player, as Riyad's put it. His question is this realistic?
Absolutely. Look, and not within a few years. And this is again, bear in mind, look, I've spent most of my life not building companies, selling them, and that's what I've spent 15 years running trade sales. We're in a lucky position. Brendan Buckley, our former chairman, he's now my co-director on the board. He sold his last company to Icon. He became the chief medical officer. Icon, he joined them. They were 800 million market cap. He had 10x uplift. He did very well in the share price. When he left a year and a half ago, it had touched 8 billion. And that was taking no risk, purely services, CRO services. And his take is, and he's an understanding, Icon would love to get their hands on the hVIVO assets. They did look at it a couple of years ago. Our friend Mr. Woodford guided them hundreds of millions. So our view is, let's not mess around. Let's get the company profitable. Let's get it re-rated. And late this year, and I mean late this year, we do need to look at a major transaction, which is probably very likely a trade sale. The reason being is that you can put the companies together. We can get them profitable very fast. If we hang around another year or two, we could have a profit warning. Our job is find 2 damaged houses, replace them, clean them, fix the windows, replace the doors, clean them up, put a tenant in, and move on. As you know, Ben, there's 460 odd AIM listed companies. 80% have never made money in their life. They're loss making. My belief is our job is to come in, tidy them up, fix them up, move them on. We're not going to give people 5 times the money or 6 times the money unless that lottery ticket flu vaccine comes good. People coming in today should look at getting 2 to 3 times the money by Christmas when we exit. So it's not years, it's when we exit. And again, another part of the reason, look, we have the hottest facility. People ignored 6 weeks ago. Today, with Chinese people around the world looking to get access to the 24-bed facility here in London. It's a quarantine facility. Looking to get access to the Chinese study models, looking to get access to the virus. So you and I know, hopefully, this virus is going to go away. It may not, but let's not take that risk. Let's sell when there's huge interest in the market, and that means the commitment. And also, look, our 2 major shareholders, IP Group and Invesco, said they would back the management team. If we committed, likewise, fix it and sell it. So we've got a kind of ticking clock. And once we get profitable, we're going to have lots of options. We might merge with a very big company. We might sell, but I think Christmas time is decision time for everybody.
Excellent. So you talked during the presentation. You said that you wanted to speak a bit more about why you feel that you and your team are the right people to be driving this business forward. So in that context, Robbie's actually asked us a question where he's said, "Can you tell us about the new management figures in place following the mergers? What experience do they have, and why does this make them suitable for the roles they have taken?"
Okay, good question. Look, I'm not a competent CEO. I hated the last year being the CEO of a small pharma services company. I'm not appropriate. I'm very good as a cost cutter. I'm very good at doing deals. I'm very good at raising money. So I was never happier to hand over that role to Trevor Phillips as CEO and Tim Sharp as COO. Both of them are lifers in the pharma services industry. Both of them came in 18 months ago. They took 11 million of the annualized cost base out of hVIVO. hVIVO was massively loss-making until they got involved. We're making it clear there's probably a few more million to come out in the coming weeks, but they're the safe pair of hands. But I'm the cranky, mouthy chairman who's going to stay very much in touch with the market. I'm going to do a lot of events. make sure the retail know all about what we're doing, and deliver results. I'm also the single largest shareholder. I set up a 2.5 million of my own cash in. At the IPO, I put 300 in along with every other investor. I've had another 300 in with every other investor in the placing 10 days ago. So there's nobody more committed than myself. So I think the combination of Trevor and Tim, the lifers in the pharma industry who know what they're doing, Morris in Dublin, who's kind of half a lifer in genomic data, and then Brendan and the other board members guiding us along. So it's a very hands-on, very small, tight team. We're not building an empire. We're building it to fix it and sell it.
Excellent, understood. So as we move forward, we've had a few questions from people which broadly fall into the same category about sort of upcoming news flow, obviously with a lot of expectation around contract wins. Now, the slide that we have in front of us, you have a pipeline, as you say, of 81.2 million. Before I ask any questions from anyone else, you've managed to double the pipeline over the last year. You've just talked about potentially selling the business by the end of this year, if with a fair wind behind you. But irrespective of that, what kind of sales pipeline growth might you anticipate by this time next year? Could we see sort of a similar increase? Will it stabilise? What would your expectation be there for the business?
Yeah, look, for any bar, and this is again, somebody spent 15 years of my selling companies, we need and to demonstrate at least 3-4 large contract conversions in the coming months. One hopefully next week, one the following month, one the following with hVIVO. That is the plan. hVIVO has to reassure the market it can convert and announce. So look, news flow, there will be more contract wins being announced by the Open Orphan Paris Dutch base. That's easy because the contracts are 500,000 to 2 or 3 million. So we are assuring the market there will be news flow. I'm being a bit naughty this week. Look, we've got rid of Jupiter last week. They're gone. But look, there's some people panicking. Oh, what's happening this week? There's a few more sellers. Look, what we like is a little bit of volatility, not too much. We don't want our share price going upwards only, doubling and then collapsing. So this week, I would say, is the week of a little bit of volatility. People can trade in and out. And next week, we would hope to, let's say, drive things forward and keep it going. So we're not going to have a straight line up 50% or 100%. We'll bounce it around a little bit, but the plan would be to keep news flow. And I think, look, if I'm going to be doing a lot of investor relations every second week, I can't do that without news flow. So I think if all listeners can bear in mind, small cap AM companies die without news flow. We're in a lucky position. We've now put 2 small cap companies together. So we should have twice the news flow of any small cap companies. Does that answer your question?
Yeah, it does. So I think in summary, so people when they're asking, will you announce to the markets contract wins as they come in? It sounds like the definitive answer to that is yes, of course, because you need to demonstrate the ability to close this pipeline that you've built.
Yeah, and look, also to reassure you on the sales process, look, any bar looking at the business, we have got unique assets. Any vaccine services company would give the right eye now to have the facilities here in London. We could start a sales process today. We would get a good turn on our money. The inflection point will be late this year when we have proven to the market, and this answer, announced 3-4 major contract wins. And look, I'm staking my reputation between now and the summertime. We will have 3 to 4 major contract wins in hVIVO, publicly announced. We're not going to hide anything. As the contracts come in, you'll be the first to learn about them. Within then the next piece, no big multinational is going to buy the combined business that is profitable. And I think I've proven in Open Orphan, we will make these companies profitable. They're not that hard. You just keep cutting till you hit the break-even point. And then your last question, yeah, the pipeline is growing. There'll be something phenomenally wrong if we don't have the facility. In past years was 30-35% occupancy. It's almost like filling bedrooms in a hotel. If you don't keep that occupancy up, you lose money. There'd be something very strange this year if we're having a very high occupancy level, given that this is one of the few places in Europe where you've got 24 beds that you can actually a high quarantine clinic and a viral laboratory on site. So I think I can assure you, news flow, conversion, do those. May the exit commence, as I would say, late this year.
Excellent. Well, let's talk a bit about the wider business. I find it very interesting for following the previous webinar that we did a few months ago. Robbie's asked us, can you talk us through the progress across Open Orphan's wider business? How are the genomic health data platform and virtual rep platforms developing?
Yeah, look, Morris, this is his baby. He put one together before. Now he was only as the rep of a venture capital company called Arch Ventures. They put it together in Dublin. It's called Genomic Medicine Ireland. Again, a good example. Sell early and sell soon. In year 3, they sold for $580 million to Wuxi in Hong Kong. People said they sold too soon, but they only invested capital of less than 100. They got 5 times the money. So that was him. He had a tiny stake. He brought all that knowledge of building. That was probably Europe's biggest genomic database. They basically got patient records of 100,000 Irish people, and they got out. So he's here helping us now, repeating all that, but this time he's doing it at a fraction of cost, because we are doing it on a similar platform, which is basically a copy, but we're actually storing data on behalf of patient advocacy groups that we had targeted to have a certain amount of data in by the end of this year. hVIVO has 30 years of clinical trial genomic data sitting on file in-house. So Morris's job now is, well, rather than waiting slowly to collect that data, he's a treasure trove of data here in hVIVO offices. Let's integrate that. So basically, not alone do we have a lottery card in the Immutex, having a flu vaccine, a universal flu vaccine on our hands. We also have a FOMO, as Brendan says, fear of missing out. So we're running the sales process later this year. Having the genomic database and having it populate a decent amount of data, a lot of the buyers will say, wow, we got to buy this because look, hey, these guys have built that genomic database. The reason we should sell soon rather than late, within a year of Morris's business being sold, the Irish government got a bit arsy and naturally said, hey, hang on a minute, Wuxi is a Chinese company. 100,000 of the Irish DNA is now technically belong to a Chinese company. So if Morris had waited a year, they probably couldn't sell that company. So again, what I'm trying to reassure Ben, if you spend my life 15, 20 years selling companies, there is a window to sell companies. If you hang around too long, that window usually closes. So I think within what we have a couple of unique things that we can sell this year. And I think we shouldn't be greedy. Do it, fix it, sell it. And we all get together and hopefully we'll have a nice audience in London and Dublin next year and say, right, let's do another one. Let's pick up 1 or 2 more struggling name companies. Let's trash the overhead. Let's throw out a lot of middle management. Let's fix it and sell it. I keep saying there's 846 of them. We've only got 2 of them. 80% of that 846 have never made money. And that's always a crime in my books.
Well, you're certainly preaching to the choir there, I can tell you. So, in which case, that actually brings us nicely to something that Albert's brought up. You've spelled out, so how a business like Open Orphan can be affected by the macro winds. So he's asked the question here: is your business being impacted by any macro issues aside from the coronavirus? What else is influencing Open Orphan on a wider scale?
Look, we're kind of lucky on the roadshow. Every fund manager said to Trevor and Tim, will tell us about your Brexit strategy. And they said, well, we don't need one. And they said, why? We don't move product. We're services. So the services are performed in London. The Brexit strategy and the macro strategy, if you're moving product, we don't move product anywhere. We provide services in situ here in London. And we provide services in the Paris office and the Dutch office. So basically, the macro strategy, no issue. We're in a very fast-growing, profitable industry. Pharma services, CRO, it's good. So yes, look, we're in a very lucky position. I think once we're now at 30 million. We said at IPO we get 30 million in the first 6 months. People laughed. I think they're not really laughing now. I think, wow, how do you get 30 million in 6 months? We acquired it. Once we get to 40 million, 50 million, that's where headwinds, and that's where I think we shouldn't be greedy. It's easy to get 30, 40 million. Then the macro, you start bumping it against the big guys. So that goes back why I think we should be focused on an exit sooner rather than later.
So in that context, do you have any plans for any further acquisitions? This is a question that's been asked by a few people in various different ways. Is there any plan to add to the business, or are you planning on sticking with what you have?
No, Ben, I'm delighted you asked that because I forgot to mention that earlier today at another function. No, there's no more fundraising. There's no more acquisitions. We now have a really attractive full-service pharma. We've enough to do to fix it. I'm writing no more checks, and anybody listening tonight, I don't want anybody else writing more checks to raise more money. We don't. We've got 7.2 million exactly cash in the bank this evening. We're supposed to be a profitable company. We're supposed to be services. That money, the bulk of it will remain on our balance sheet to give the hVIVO major customers comfort this company is not going out of business. So no more acquisitions, no more fundraising. The next major transaction, if I've my way, and I'm the biggest shareholder, and most of the people come in, is let's sell the company to somebody. And don't say I'm not trashing and burning. I think there's an opportunity. We're minded at 30, 35 million. We can easily get 80 to 100 million. Let's not be greedy, thinking we're worth hundreds of millions. Every round the table tonight, if they were offered 2 to 3 times their share price in 6 or 9 or 12 months, go back to go, I'm sure nobody would be saying no. It's people start thinking, oh, we're going to be millionaires. Let's get 5 or 6 times the current share price. It's when we get lost. We want to keep the strategy pure, clean, and effective.
Yeah, I mean, a 2 to 3 times return on your money within 12 months. I mean, that's a phenomenal return. You've already, earlier in your presentation, you talked a bit about the current balance sheet, and you valued the real assets on the books at between 50 to 60 million, including the cash balance. So just to recap, and I know you already said this earlier on, but I think just for the sake of the Q&A, it would just be worth repeating. What do you think would be the trigger point for a re-rate in the share price so that your true asset value is recognised in the market cap?
Yeah, Ben, look, we're currently valued at 1 times revenue. Forget about the assets, okay? We do have assets. They're not sitting on the balance sheet because Mr. Woodford claimed this was a discovery company, and being a discovery company, he wanted to invest hundreds of millions and keep writing checks. So he would what they would call non-capitalized investment. It was just written off as he went along. But we do have 50 or 60 people can come and look at the clinic. People can in East London. It's part of Queen Mary's Hospital. They can come and see it. And in the deck, we've been verified by Lawyers with £25 million worth of challenge study models. Nobody in the world has that. But sorry, Ben, I've lost my point. Give me the question again.
So I was asking what you think the catalyst will be for the re-rates in share price. You know,
brilliant. Apologies. Yes, we're valued at the moment at 1 times revenue, and that's proper value. We're loss making. Why is most pharma companies, Ergomed, Zico, and everybody else valued at 3 times revenue? Because you get 25% of the contract up front in cash. You're generating gross margins as high as 40-odd%, net margins of 15 to 20%. It's a very profitable business. So hence, on those margins, the valuation of a pharma services company is 3 times revenues. We collectively and individually have never made money. So the market, and I value it at 1 times revenue, that's enough. We're loss making. I'm giving clear guidance to the market. We'll have within Q1, at the latest within Q2, we will be announcing, making it clear we won't be backwards going forward. We will be profitable because there's something badly wrong if we're not profitable. And that 7.2 million cash balance on our balance sheet as of today will be at risk if we don't start making profits very fast.
Yeah, exactly.
So the catalyst then to re-rate is when the market realizes these folks have eliminated those losses and they're profitable. Zico is a classic one. It was making losses forever and amend. Last summer, finally announced, bit of slashing and burning, went profitable, and it got a 3x uplift in share price. Now it trades at 3 times revenue. The share price went from 20p to 90p, steadied back at about actually 4x uplift to 80p. That's what happens when companies stop burning cash. That's when you move from the 80% loss-making companies to the 20% of aimless companies that actually make money.
Absolutely, no. And so we received a question from Kieran, who wanted to ask what the plans are for using or deploying the 5 million raised in the recent placing. But if I've understood this correctly, what you're saying is this is it's almost a defensive move in some ways, where you put in place a foundation, a cash foundation for the company, so that, you know, in the event maybe things don't quite work out as expected, and you know maybe the losses continue for a bit longer, you have a bit of both buffer space to give you the ability to close some of these contracts, but also more importantly, to help you close these contracts, you can demonstrate to potential customers that you've got sufficient cash resources behind the business to see you through the initial stage of delivering the contracts.
Ben, you have it in one, but we do have, look, bear in mind, when I came into Venn with 179 staff, we've lost 49. There is the last 20 tricky ones, being honest, mostly French and a couple of Dutch, who won't leave without a little bit of a push. It's almost, I keep asking, can they fly? Can they go out the top window? No, you're not allowed to do it in Paris anymore. So we've got to incentivize them by paying some of them off. So off the fundraise, we have allocated about $750,000 for rationalization costs. That's to get our French and our Dutch headcount down to the 100 total in the group. That's where we go, certainly profitable. The rest of the buffer is you're absolutely right, just in case any slip or trip. But it's really that hVIVO pipeline, the 80 million pipeline. They are large pharma companies around the world. They're US State Department. There's different parties at the table who want challenge studies done. They don't want to be dealing with a little company running out of cash. They want to say, show us the money, 5 or 6 million. Oh, you're not going to the business. We'll sign your contract. hVIVO had a rough time for 2 years. The share price collapsed by 95%. We picked it up for a song, but nobody was going to sign contracts where the share price would free fall and the cash running out rapidly. That's all sorted. No more share price crashing. And we've, as you said, Ben, there's a cash buffer in the balance sheet to reassure the customers hVIVO's not going out of business anytime soon.
Understood. So we've got a very good question here from Joel, which it would be good to hear the answer just to clarify sort of the long-term plan with respect to a sale. So Joel's asked, is the plan to sell the Open Orphan genomic business alongside hVIVO and Venn? So when you talk about making a sale of the company, are you talking about selling the whole thing, or are you talking about selling parts of it?
No, Ben, the entire thing. The combination is worth more. I don't think any shareholders around the table want us to be sending them a dividend check in this. No, look, Open Orphan is a full services company. It now comes with Europe's only 24-bed quarantine clinic, comes with a viral laboratory, the chance data models, and comes with the genomic database. So it's far more as a combined entity. Look, it sounds cheap. We only want 100 million for it. That's 3 times the current share price. That's only 100 million. That's 3 times the average companies. That's just the normal trading revenue. So I think we're not going to be greedy. 3x, it's a good figure. And look, again, some people are a little bit uncomfortable. Oh, Cathal fixes them up and smashes and moves on. But hey, folks, look, 846 companies, 80% loss making. That's not a great place to be. I think we want people to be terrified. Cathal Friel and the guys are coming next year again. Consolidate, fix, move on. I just think at the times of Neil Woodford perennially throwing buckets of cash into loss-making companies, you, me, and everybody else, I buy a lot of shares in small name companies. I go bananas every time there's a big discounted rights issue. It's just paying management salaries. I think the time has come. We're very lucky. Let's turn around. It's a bit like what people have done for years. Let's fix up some houses and move them on. People who fix up houses, the people who make the most money, is fix them up and move them on. It's not people who hang on to them.
I really couldn't agree more with you about that. And I very much get the sense out there that people have really had enough of that aspect of the market, these perennial discounted raises just simply to pay directors and advisors fees. And that really all the only purpose they serve. There's no value being created. So, no. Yeah, I think the way you're pitching yourself and your team, and I definitely see the long-term potential. So, okay, well, let's talk a little bit about the market opportunity then. So we've had this question submitted in advance by an investor. I'll just read out what he's put here. So he says the share price has taken a hammering and is well below the current place. Sorry, it's well below the placing price currently. I think it's a bit dramatic, but let's stick with the point. Are Open Orphan in contact with their broker to try and clear any large sellers? As the placing was oversubscribed, might some institutions be interested?
Yeah, look, I think, as I said clearly, this week is the week for a little bit of volatility. Look, last week, Jupiter sold out entirely. That was 8-9% of the company. So if Jupiter wasn't selling last week, that shareholder would say, wow, we've been up probably 30-40%. Share price down dramatically is a bit melodramatic because we're down 6%. And there's no major sellers today. It's some people panicking. I think we've a bit of almost the coronavirus is good news for us, unfortunately. But there's some people panicking, oh, the market's going to melt down. So I think watch this space in the coming weeks. I met a lot of people at the show who said, look, Cathal, wow, when the share price dipped in the run up to Christmas to 4.5, people were saying, Cathal lost the plot, who's been non-exec chairman, we don't like. I was very happy. I filled my boots at 4.5p. It was back up at 6p. What we be suggesting to people is don't fill your boots, but look, it won't be straight upwards only. There was oversubscribed as institutional. We will have people coming into the market the coming week. I think, being frank, we need to deliver some news flow, real news flow, other than me talking a good talk. So I would be disappointed if in the coming week or two there's not some decent news flow from either Open Orphan, Venn side, or hVIVO on contract wins. If we're going to make companies' business profitable, you've got to see the contract wins. So I would guide people, watch the market for news flow and contract wins, and watch what happens to share price afterwards. I think short term, over the coming days and weeks, I'm not going to get obsessed if the share price is up or down 10%. I'm looking for the double when we get re-rated in a month or two, and a triple by the year end. So we advise people to just go easy. Don't go crazy. But as we announce news flow, reward us by buying the shares. Don't buy them till you see the news flow, and the news flow being real contract wins.
Yeah, you've made that point crystal clear over the course of this presentation. That what all shareholders should be looking for will be the conversion of this conversion of as much of this £81.3 million pipeline as possible. So we're now coming to our last question. So if anybody else has any final questions, please do send them through to our moderator. But to finish off with, unless we get any other questions through, Kieran's asked us, Cathal, will you or any of your colleagues be investing any more personal money into Open Orphan? You've already given us an idea of the extent to which you back the company, and of course you've just cautioned against going all in on this. But what would you say to Kieran? What's your plan?
Yeah, well, Kieran's, again, this is a typical public company director question. So here I go. We can't buy shares because we're insiders at the moment. We only can buy shares in placings, okay, when the market is cleansed. However, over the coming weeks and months, if there comes an opportunity when we're cleansed, we're not subject to information, absolutely, I'm always interested in increasing my stake. I just think I said earlier, there's a sleeping giant. It's probably one of the best opportunities I've ever seen in my life. And given that we're in control and we have a clear plan, fix it and sell it, I think it's great. So yeah, if I'm allowed an opportune time, absolutely. I've most of my friends, colleagues, relations invested in the company, so nobody has more exposure than I if we don't deliver. But I wouldn't have done that unless I was clear on delivery. Actually, segue slightly one party I forgot to mention to you, and it's very interesting, and it's just not to overdo the Corona business, but the original founder of the company, he's become a friend. His name is Professor John Oxford. There's a Wikipedia page on him. He would have been very involved in the company up to 5 years ago. He took time off and moved away. He'd been very involved in the SARS epidemic, very involved in the MARS one, very involved in Ebola. He published a book 2 years ago. Front page of it is, guess what? It's a coronavirus. Even more importantly, the front page of the book, the cover, is the Wuhan coronavirus. Like, he has now come back in recent days. He's agreed to be a consultant advisor to the company and myself. So John is going to hopefully help the company in the background as well. He's going to be probably chairman of our scientific advisory board. So I think there's substantial movement all around. He's come back and he said, "Wow, Cathal, I formed this company in '89. I am a leading." He's been on the BBC News. He's been in Sky. He's seen as one of the world's leaders in vaccines and dealing with the coronavirus. But he says, "I'm very keen to get back involved." I think hVIVO is now at a point in time when I've always thought it could get to. It's the center of the storm as we speak.
Excellent. Yeah, and it's as you say, incredibly timely as well. I mean, as you say, unfortunately, incredibly timely, but it's obviously really sort of put quite a significant aspect of the business, deep into the popular consciousness. So and that's obviously I can see sort of how that's going to help strengthen the offer. So, okay, Carl, look, we've got one final question here, which you have broadly answered, but let's use this as a way to sum things up and finish off. Albert's asked us, to sum up, what are the core reasons to invest in Open Orphan right now?
Okay, a good question, Albert. Look, we're booking the trend. We're putting our money where the mouth is. I don't think there's many managing teams who would write as much of a check as I and some of my colleagues have written. We've a really, really clear, non-distracted model. We're going to fix the company. We are conscious of our staff. Look, we don't want these staff in both companies have a traumatic 2 years, collapsing share prices, almost run out of cash. The funny part is the staff can't wait to be part of a big company. And then the reason to buy it is we're currently trading at 1 times revenue because we're loss making. When, not if, we become profitable, that should re-rate to 2 times revenue or 3 times. We're also, and we're being careful, but every cloud is a silver lining. Speaking to John Oxford, he believes SARS disappeared, MARS disappeared. He said, look, we all got to take a deep breath. Corona is coming, but Corona will go. Smallpox was the most deadly virus in the world. The governments got together and eradicated it. Viruses are not hard to kill. You just need government support. So I would be very optimistic the current epidemic will pass over. It's a bit like a nasty dose of the flu. The flu is actually more deadly. But I think where we are, we think we're genuinely lucky. I cannot believe 2 months ago we sat down to try and work with this company that it would be front of page headlines, some of the things we're involved in.
Excellent. Well, look, Cathal, thank you very much for taking the time to present to us and to answer all the questions that viewers and shareholders have put to you. We're obviously looking forward to news flow over the coming months, and in particular, we're obviously all hoping to see you close some of these contracts.
I would say, Ben, I would say weeks, not months. We're all dead in months. Weeks, okay?
I mean, the coming weeks. Okay, let's really nail our colours to the mast. Yeah, so obviously, you've given a very, very bullish view of the company. So thank you for taking the time with us this evening.
Ben, as always, it's a pleasure. And look, I'm always open for challenging. So I'll go to a lot of investor events over the coming months. So please, anybody I'm not delivering, feel free. You know where to find me. They're on the website. Meet me at some of the investor events and give me a hard time if we're not delivering, please. Okay.
Excellent, brilliant, and thank you very much to everybody who's taken the time to view the presentation this evening. Thank you.
Thank you, Ben. Thanks. Bye.